Welcome back to Trading IQ, where we will learn the unlimited nature of the stock market. In my last video, I have shared the comparison between the Nifty 50 and the global market, which are the Dow Jones and Nasdaq. If you haven't watched this video, I'll paste the link on the I button. Now, based on the conclusion that we had arrived in my last video, was that the global market was, it was hovering sort of in a very huge support level, which was the same level which it was before the COVID-19. And Nifty 50 compared to the global market, it is performing very strongly. Now, this week I think it's going very good. The market has actually rebounded, and globally all other markets are performing very good. So in today's video, as I promised in my last video, that I'm going to do some sector analysis, because the Nifty 50 is showing very good strength. Now, Nifty 50 is a collection of all the sectors that are there in the Indian market. So of course it's gaining some strength from some sectors. So let's jump into my screen in today's video and find out which of the sectors are performing and supporting Nifty 50 and giving that strength for Nifty 50 to performing what it is doing right now. And there are some sectors which are performing pretty badly, which is affecting, and that's why the market is in a bearish mood, because there are some sectors which are performing very well. That's why the market, the Nifty 50, is not seeing that level which it saw during the COVID-19 time, like the global market is seeing at the moment. So that's why we have some strength. So let's jump into my screen and do some sector analysis. It's going to be very interesting. Let's start with the famous Bank Nifty and see where it is at in terms of STAN WEINSTEIN'S Stage Analysis. So let us draw a key level again. So this level is seeing very widely in the global market as well. So this was the level before the COVID-19, right? Just before the COVID-19 hits, right? So, and Bank Nifty touched this level several times. And if you noticed Nifty 50 and compare it with Bank Nifty never got that momentum which the overall market saw. So when comparing the overall market, Bank Nifty underperformed significantly, right? Because you see, this is the level before the COVID-19, and then when it eventually broke out of that level, it again saw a decline. And it touched below that level, and then again it saw some upward momentum, and then again it's hovering around the same range, where Nifty 50 was performing very good during the time of its bullish momentum. Bank Nifty was in stage 3 for a very long time. It is still in stage 3. While you may say that it is in stage 4, and there can be a healthy argument that it is in stage 4, but it's just perspective, because this is in a channel, it's moving for a very long time. Now this is a channel that it is moving, and of course it broke down of this 30-week moving average, but again this channel formed back in early last year, February 2021, and it is again in this sort of range, right? So it is in stage 3 for a very long time, for over 1 year, 1.5 years. It's been in stage 3. It never saw that sort of momentum which Nifty 50 saw. It totally underperformed, and again it's in stage 3. So again, if you have to buy any banking stocks, you first have to understand where Bank Nifty is at. It is in stage 3. So based on the rule, you can only buy when the overall market is in stage 2 or a continuous stage 2 setup, which it is not. Nifty 50 is in stage 4, and on top of that, Bank Nifty is in stage 3. So there is no point in even thinking of buying any stock from Bank Nifty. But there are some exceptions. We will look into different stocks from different sectors, but we will prioritize sectors based on the structure that it is showing at the moment. So based on the structure that I see, Bank Nifty has been underperforming for a very long time, and since the market is in bearish mode, though it saw some upward momentum from this level, for the last few weeks, I would still not be bullish on banking sector. It's just my perspective because it's in stage 3. Let's look at a sector which is significantly outperforming the market at the moment, and I'm talking about auto sector. Let me find this out. Here it is. Let me remove the drawing. Now this is auto sector, and I'm going to dig in deep on this sector in my upcoming videos, and analyze all the stocks that are there in the sector, and see which are the stocks we can look to buy in the upcoming days, weeks, or month based on some key levels that we will identify. So why it is why it is outperforming the market. So if I add relative strength, which I haven't added, let me do that. Relative strength, I'll compare it with what? Nifty. So you see, this is easily outperforming the market. So this is the level. This is Nifty 50. The horizontal line is Nifty 50, and it is exceedingly outperforming the market, right? There's no question about it, and you can see that the overall the Nifty 50 is in stage 4 and auto sector is in stage 2 continuation setup. Now this was the level before, way before COVID-19. Like it was the level that it saw during 2018, and since then market saw a huge bearish market, like a bearish market for over, I think, 2.5 years. And due to the COVID-19, it saw the lower level that it can show, right? The very significantly lower level, as you see on the chart. Now since then, there were some hiccups. While Nifty was performing very good, you see the hiccups during the journey. Here it broke out of that level while Nifty was in stage 2 continuation setup. But then, since the time the bearish market started, because of the electric vehicle sales are it's been very high compared to the last few years, and there are some key stocks which are outperforming all other sectors. Tata Motors and some other key stocks from auto sectors are exceedingly outperforming the market, and that is the reason why the overall auto sector is in a very good shape. So this is, it even broke out that level during the bearish market. When the overall market is in a bearish mode, auto sector is in continuous stage 2 setup. So this is continuous stage 2 because it broke out of a significant level which it never saw this level since 2018, and it tried to break out of that level around early end of last year. But again, it saw the bear market, the Nifty 50 started falling, and it also fell with the momentum with the overall market. But again, since then, it's been showing very good strength, and it is currently in continuous stage 2 setup. So it's a very promising sector to look at stocks from, and I'm going to dedicate one video and analyze all the stocks that are available in the sectors, and we'll look at their chart pattern and see if there is any stocks that we can look to buy in. I mean, of course, I'm eyeing in some stocks. Tata Motors is one of the stocks that I'm eyeing in, but there is some level that I have predetermined some level. So I'm going to share that on my next video. This is purely going to be sector analysis. So let's look at another sector which was outperforming during the time of the bullish run. Now it does not have any strength. I'm talking about the IT sectors. You might have been seeing the news that IT sectors are laying off employees because of the overvalue situation. The market has been overvalued for a very prolonged time, and it has to come to a logical point for it to again get some momentum back. Now let's look at this IT sectors, and it is clearly in stage 4. You have seen the auto sector, and when you see, this is the auto sectors which is exceedingly performing well, And when you see the IT sector, let me again add relative strength to this chart. Here it is. I'll just change to NIFTY 50. Now you see, NIFTY 50 is in stage 4. It itself is performing poorly, and then IT sector is underperforming NIFTY 50, right? So it's in dear stage 4. So again, let's try to draw some key level again. So this was the level before COVID-19, right? Now compared to Bank Nifty, which I shared in the beginning of this video, it was hovering around that same level, but IT sector is showing some different picture altogether. Where is it here? So again, it saw huge rally upward, and when it is, of course, it was overvalued for a very prolonged time, and that's the reason why it is kind of retracing back. So this was a stage 3 around this time. Focus on this area, not this area, the current scenario, right? This was the channel that it had created while it was moving, while it was having that upward momentum during the bullish run, right? So this channel was very significant. Now you see the market has came down to this very same channel, and it is getting some sort of support. And since the overall market, the global market, has some support nearby, we could definitely hope for some relief from the sectors, because it has seen the recession. I mean, companies are laying off people, and all sort of bad news has been. We have seen all that. Like, we have seen everything that we can see. However, there has to be an end to this, right? So if it has to be an end, this could be a level, a significant level. This channel could be a significant level to which it will rebound back from. And even last week it saw about 7% upward momentum. And again, it is in stage 4. There is no question about it. It is in stage 4, and based on the rule, you should look to stay away from this sector altogether, right? I'll again dedicate one video on this particular sector, because there are so many valuable stocks which are, of course, which have been overvalued for a very prolonged time, and that's why, if it is giving you some cheaper rate like TCS, it's a multi-billionaire company, and if you see some level that you have been eyeing in for while the market was bullish in very bullish stage in last year, you could not buy because it broke past of so many levels. Now, if you have any predetermined level, you could definitely invest some amount, right? Again, this is not an investment advice. I'm just doing my thorough research, and I'm sharing my perspective, like how I see the market, right? There is no way this is any advice or suggestion on what you should do. You should do your research. You should carefully, thoroughly do your research on different sectors. I can only help you, guide you through different other ways that I do what I do based on my trading plan. You can look to adopt this one or try to improvise on this one and create your own plan. It's all about having a plan. Again, you have to have a plan. You cannot simply buy any stock out of compulsion. If you're acting in the market out of compulsion, that is a very dangerous sign. So it's a very key thing to have in your armory, to have a plan and then act according to that plan. I hope you like this video, and if you do, please like this video, subscribe to my channel, and share these videos. And in my next video, in my upcoming videos, I'm going to do some key sector analysis and stock analysis. So I think in my next video, I'll do stock analysis from auto sectors and see which are the stocks that I'm eyeing in and how do I predetermine level so I can negotiate with the market? How do I negotiate with the market? And even I will share one of the stocks that I have that are there in my portfolio, and why I bought those stocks in my portfolio. I will share those as well. So until then, I see you guys and have a wonderful day. Thank you.